everyone, and welcome back to our channel. If you're new here, I'm Landon, and with me is Andrew. And today we're going to be diving into the world of dividend stocks. Whether you're a seasoned investor or just starting out, this video will guide you through some of the best dividend stocks to consider in 2024. So grab a drink, sit back, and let's get started.
Yeah, before we jump into our top picks for our dividend stocks, let's talk a bit about what dividend stocks really are. Dividend stocks are shares of companies that regularly pay out a portion of their earnings to shareholders. So it's like a great way for companies to give back to their shareholders. It's kind of like a thank you. It's also a great way to generate passive income as a shareholder. And I mean, who doesn't love that, right? You get to sit back, watch your money work for itself. So for our first one, we have Verizon here. Okay. So Verizon, everyone knows what Verizon is, right? Phone company, well, telecommunications company, if you want to, be technical with it. But I'd say this is one of the biggest communication companies on the market right now, right? So very trustworthy company. Their ceiling is very, very high, and they'll continue to grow, right? Because people are always going to need communication. So also a thing with these dividend stocks is that we don't just want something that has a high payout, right? A high dividend yield. So we could choose some, rinky-dink stock that has a 50% dividend yield, right? But are they trustworthy? No. Is there room for them to, have good price action in following years as a long-term investment? Probably not, right? So we want to find stocks that are, going to go up, dividend grows, and more. So that's basically the basis of what we put together here. So if we take a look at their dividend yields here, we see that Verizon has risen by 2% every year since 2016. They are continuously growing, right? And their revenue has been, on a, I wouldn't say linear rate up, but it's definitely on a uptrend, right? So Verizon directed 60% of their cash flows to dividend last year, which is great for the shareholder, right? They really do care about their shareholders. So great company to invest in for dividends right here.
Yeah, Andrew, I really love Verizon. So jumping to our next one, we have Johnson and Johnson. This company is not just a healthcare giant, but also dividend aristocrat. Having raised its dividend for 25 consecutive years with a current yield of 3.19%, Johnson & Johnson is trading about 9% below its fair value, and their diverse product base and solid pipeline keep them at the top of our list. What makes Johnson & Johnson stand out is their wide economic moat, meaning they have a strong competitive advantage. This makes their dividend and future even more secure.
Yeah, Landon, Johnson & Johnson's, a health company. Everyone knows of it, right? Very, very good company. They do a lot of great things in the health industry, and I can see them continue to rise forever, right?
100%.
Yeah, and you can see here their dividends only going up, right? So they're continuously improving. Great stock. Jump to our next one. We have ticker symbol MO, right? MO is one of my personal favorites.
Love this one.
Oh yeah, me and Landon have been with this one for about what, Landon? Like three years now?
Yeah. Woo.
Yeah. Mo is a great stock for dividends and continuous growth. As you can see here, they have a dividend payout of 8.9% annually, right? Great dividend payout. They continuously rise. They're a tobacco company. They're one of the leading ones in the U.S., and they're not just sticking to traditional cigarettes, which is great because, the tobacco industry is diversifying. You have products like nicotine pouches, nicotine gum. I mean, the possibilities really just endless for the tobacco industry, and they'll continue to innovate. So, MO is a great stock. MO has an ability to price their products above the rate of volume declines, which ensures that they can keep growing their revenue and dividends. And they have an 80% payout ratio. So they also prioritize their shareholders, which is great for people like us, right? They really do care about their shareholders. Very nice dividend yield, and I would definitely recommend them.
Yeah, Andrew, I really, really love that one. So moving on to our next one, we have Comcast, ticker symbol CMCSA, with a dividend yield of 3.05%. and trading 31% below its fair value. Comcast is a great pick. Despite some challenges with their streaming service, Peacock, Comcast's core business remains very, very strong. Um, Comcast has a solid record of increasing dividends, averaging a 15% annual increase since 2008. Their pricing power and steady growth make them a reliable choice for dividend investors.
Yeah, Comcast, everyone also knows Comcast. You want to stick with companies that you know here. They're a media company, and people are always going to be taking in information, right? Watching the news, watching, shows, whatever it may be for entertainment purposes. And you can see here that they did have a decline in 2016, going into 2017, a big jump, and then, back down in 2019. But for the past 3 years, they've been pretty consistent. And Landon did mention that they are trading below market value, right? So what market value means is that the stock is valued at a higher price than it currently is, right? So our rate that we found is that Comcast is trading 31% below market value. So the number I'll throw up on screen is what it should, the valuation that it should be trading for, or at least what analysts think it should be trading for. Yeah, jumping over to our next one now, we have MDT or Medtronic, right? The greatest thing you can do for your long-term investment portfolio is diversify. That's why we have tobacco, we have health, we have communications, and for our last one, we have defense and tech, but we'll get to that. You want to really diversify because sometimes sectors don't do good in 1 year, right? So you'll have the finance sector do good 1 year, and you'll have the media sector do bad 1 year, right? So you want to diversify to make sure that you're accounting for the sector being bad. If it is, by accounting for the sector being bad, you minimize your risk, right? So a lot of people don't trade stocks because they're not okay with the risk, but there's great ways to manage your risk. And looking at Medtronic here, we can see that they've been on an 8% incline for the past 6 years here. They did have a slight decline from 2022 to 2023, which I'm not really concerned about because 3% is still a great rate, right? Medtronic offers a 3.38% dividend yield and is trading 27% below its fair value. So I'll throw up the number that analysts think it should be trading for on the screen. Medtronic's diversified product portfolio and strong relationships with hospitals make it a key player in its industry. You also have to think that, people are always going to need hospitals, right? People get sick, people need treatment. So great company to, watch here, and good company to diversify your portfolio with. Jumping over to Lockheed Martin now. Also, one of my personal favorites, right? Everyone knows Lockheed Martin. It's a defense agency, right? The U.S. defense uses them quite a lot. They're one of their top contractors. You got planes that they make for the U.S. military and more things. And as tensions increase in the world, Lockheed Martin will continue to go up, right? As you can see here, they've been on an incline since 2016. So great dividend stock. And they do have a annual dividend rate of 2.7%, right? And that might not sound like a lot, but when you look at their stock price of $467, 2.7% equals $12.60 annually, right? So Lockheed Martin is a great stock to get in here. Their quarterly dividend is 3.15, right? And there's 4 quarters, so that's how we get the $12.60 annual dividend rate. Lockheed Martin, as tensions rise, will continue to go up. So great stock to hop in here. It is a little high right now, so be careful hopping in because there are tensions in Palestine and Israel and whatnot. But in the long term, great stock to hop in. Jump to our last one here. We have Apple, right? And Apple only pays a 0.53% dividend yield annually, which is not a lot, right? This is not a lot at all considering the price and the percentage. However, I really do love Apple because they have a continuous growth. And I'll throw up a chart on screen right now so you can see their growth. But Apple is just continuously growing, right? And it will continue to grow. It's one of the leaders of the S&P 500 and the tech sector, and it's a great stock to get into. I mean, if you think about it, almost everyone has an iPhone, right? You see people with Macs. It's one of the most, used tech companies of all time, right up there with Microsoft. Apple is a amazing company and definitely something I would recommend for the long-term hold. I think I saw a statistic, but I'll throw it up on screen. It's like if you invested $10 or $100 when Apple was, trading like 10 years ago, you'd have this amount of money, right? And that's for a reason. Apple will continue to grow and is a great stock to hold long term. I hope you guys have enjoyed this video. If you did, please be sure to subscribe, leave a like, and join our free Discord. Link in the description for more information on the stock market, options trading, and long-term holding. This has been Andrew and Landon, and I hope you guys have a great rest of your weekend.